This is the European edition of Breaking Banks, the world's #1 FinTech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving FinTech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the FinTech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing FinTech players in the world today. Okay, let's roll.
Hello everyone, and very much welcome to the 156th episode of Breaking Banks Europe. You're listening to news from the FinTech front, and we'll be discussing today with some very esteemed guests what's happening on the other side of the Atlantic and in Europe on the FinTech front. We've looked at all the news and got some really good experts out here to actually help you out and discover what's not just the news, but what's going on behind it. First of all, we've got Florian Graillot, our InsurTech expert from astoryaVC. Very much looking forward to have you on the show, Florian.
Hi, Don. Thanks a lot for having me. Hi, Alex. Looking forward for our discussion.
Great. And we've got another big name, and that's Alex Jimenez, coming to us from the US, covering everything that's going on the other side of the Atlantic and global. So very nice to have you here, Alex.
Thank you for having me, and I'm glad to be here. And I learned from what you guys are doing in Europe.
Great to have you here. And my name is Don Ginsel. I'll be your host. First-time residential host here at Breaking Banks Europe, and looking forward to shape the conversation and help you find your way into everything behind the scenes in FinTech. So we've seen a lot of things coming by, even though it looked like it was going to be a quiet Christmas and New Year's Eve. It seemed like there was still a lot going on. And actually what was interesting to trigger, I think, is that a lot of the funding news was relatively early this year. So the reports about the developments in 2022 came very early. And so we have something to talk about because actually 2022 wasn't that bad if I look at it. So what's your take on that, Alex?
Yeah, I think as we started seeing the economy soften, people were thinking that investments were going to dry up. But there's still a lot of money looking for places to land, and there are a lot of really great models out there that are providing solutions for consumers and businesses out there. So certainly that makes sense. 2022 was not as high as the previous year. But it still was a terrific year in various areas of FinTech. Lending is one that people have been. Lending is probably one of the areas where people have been being very cautious in what money they're going to put in. But it's still out there, and cryptocurrency, of course.
Also been a bit tough year for crypto indeed. And I think as well, if you look at the numbers, it looks like actually not 2022 is an outlier, but actually 2021 was, right? So it seems like there was a big hump that everyone took with inflated valuations and enormous numbers that were going into the market. Where actually, if you would erase that year, it looks actually pretty strong growth over year to year, counting backwards. Mm-hmm. So, Florian, how do you see that actually happening in the InsurTech field and across Europe?
Yeah, that's almost the same. And I would say it highly depends on how you measure the activity, because that's true that what we see in FinTech is rather that 2022 was aligned with 2019, 2018, 2020. And the anomaly was rather 2021, which was huge and kind of crazy. In InsurTech, almost the same. If you have a look at investment in terms of euros invested, obviously it's down. And quite significantly, because it's 40% drop from a year before. But if you have a look at the number of rounds that were announced, then it's up 10%. So again, depending on how you look at the market, you can have a very different conclusion. It seems that corporates are rather looking at euros invested, considering that this is the end of insurance innovation or InsurTech. Investor and startup obviously look the glass half empty, half full, with the number of rounds more important than a year before. And quite interestingly, half of the rounds that were done in InsurTech Europe last year were below 3 million euros. So very small. And I believe it's related to the stage of maturity of InsurTech. We are still at the very beginning of InsurTech and innovation more generally in insurance. Alex, you referred to lending, which has been a hot trend for years. In FinTech, there was neobanks that attracted a lot of money, and I think that we will come back to that topic later on. Mm-hmm. But basically, there were several very important trends in FinTech that leads to a huge amount of money invested. In InsurTech, we are still early. There are several trends, but they are still small as well. So the pattern is here, but a lot is expected to come in the next years.
I think there definitely you see a big difference between the different sectors within FinTech or InsurTech, how do you want to shape that market. But indeed, you see that some parts were really inflated. Neo-banking area for sure, right? I think that was also the game where it was profitability was something that you shouldn't be talked about. It was growth. And I think you see now, we saw, for example, in the news that one of the neobanks actually had to fold in Germany recently, which I think is just a sign. We've seen also some sniffing around for acquisitions, but I'm curious about how you see that in the USA. Alex, how do you see the developments there with regard to neobanks?
Yeah, neobanks are not as successful, quote unquote, as in Europe. So it's a slightly different market, but look at what's happened with Goldman Sachs, right? They stood up their own neobank, if you will, and they have lost a ton of money, right? And what I just read this morning that they invested $3 billion in the past 2 years on the retail banking side, which includes also the credit card with Apple Pay. But they continue to lose money on that side of the business. So it's been difficult in the U.S. market for neobanks to unseed, particularly the big banks. And their proposed models and their solutions are not that significantly different from what big retail banks in the U.S. offer, whether it's Bank of America or Chase. Whereas in Europe is a different market.
And what do you reckon actually makes that different? Because I think if you look at banking in the US, it's also not far advanced compared to Europe that you would actually say that there's not an opportunity. So what's making it so hard?
I think people are very entrenched in their behaviors and who they bank with. The number of people that actually switch banks is fairly small. And while surveys are done of consumers to find out if they're happy with their bank and how likely are they to leave, there's always this number of about a quarter of consumers saying that they're leaving. But when you actually look at the people who are actually leaving those banks, it just doesn't happen. If anything, people might just open an account with a Chime or with a Varo or some other neobank, and it would just be an additional to their regular banking. And whether they actually switch behavior to use the neobank as their current account, that seems to be the sticking point. That they just add it for a very specific use. I'm going to put my money here for special savings that I'm trying to do, but I'm really continue to use my Bank of America or my Chase, whatever. That behavior hasn't changed. Whereas, when I talk to my colleagues in the UK, it's slightly different, right? People are more likely to be using their neobanks there as here. So, which also explains why some of the European banks that came to the States just did not do well, and some of them have retreated.
From the US, indeed. Yeah, I think indeed there was quite some of the European neobanks that tried that adventure and had a tough time. Yep. It's always interesting indeed to see those differences. But indeed, I think that the way people experience banking is still very different across the Atlantic.
Mm-hmm. Yeah, absolutely. Yeah.
Yeah, and actually the only impressive example that we have around neobanks is in Latin America with New Bank in Brazil. So that's their growth rate is quite impressive. But I believe that it's also due to a different maturity of the market itself. And though neobanks are offering a really different user experience, not necessarily the services, but at least the experience, purely mobile. That's the example I usually take. But if you have a few examples in mind, at least in France, we saw 3 waves of innovation in banking. The first one was, let's say, the retail banks, old-fashioned way with brick and mortar branches. Then you had the first wave of web-based. So you could access your account on the internet. And the third wave, neobanks, are actually mobile first. And this is a different user experience. So every time there is an improvement in terms of user experience, the question is that enough to drive a customer there? And there is another question that you raised, Don, around profitability, because the truth is that you can have several bank accounts as long as they cost nothing. It's a challenge for these neobanks to monetize their customer base. I believe that insurance could be an option. There are plenty of other options, obviously. But insurance could be one topic for them, and that's where it's slightly different in terms of B2C insurtech, because you cannot have several home insurance, for instance. You have one, and you pay upfront. Whereas for the banking app, you can have a free access. Usually the bank account is free, and then if you'd like to get premium services or let's say have international interest or features, lend money or something like that, then you pay something. So that's also a different views that we see on the market. Though the troubles around neobanks that you highlight are also true with B2C insurtech, which had a tough year last year in terms of fundraising. Let's see how this year evolves. But there's also a challenge for them in terms of growth and profitability.
I think you see it across the board that all companies that are actually aiming for a very large fragmented market, so retail or focus on SMEs, they all have to invest a lot in customer acquisition, and investors are not that patient anymore, right? I think that's I think one of the challenges why valuations go down and profitability becomes the new mantra for also fintech companies.
Yeah, and I also think it's related to the value proposition. Because if the value proposition is only to offer a pure digital experience, which is fine, because again, there is a gap, I believe, between incumbents and startups in terms of user experience. It's not enough to justify such a gap in terms of valuation and price. So I think that the challenge right now is to find the right balance between valuation and value and align these things. And that's why last year, or at least the second half of last year, there were so few deals announced, because basically every investor wanted a huge discount for any kind of startup. Whichever startup in front of them, they asked for 50% discount. That's what we hear on the market here in Europe. On the other hand, entrepreneurs were not ready to take such a cut. So let's see again how the beginning of this year changes things, because a few startups will have no other choice than to raise money. Otherwise, it's bankruptcy. Probably M&A is a third path.
Yeah. I think we've seen already some examples, right? I think, Alex, especially in the US market, we've seen already that M&A is slowly beginning to cook towards the fintech field. Did you see something interesting there already? How do you feel the atmosphere is at that level?
Yeah, I think there's definitely, with some of the valuations coming down, there's an opportunity for acquisition. And we've seen banks acquiring fintechs, and we're seeing bigger fintechs acquiring smaller fintechs. PayPal, for example, acquiring others. So I expect that the next year we're going to be seeing a lot more of that. Organizations like the big banks have not been very good at the innovation, and acquiring a fintech has always been a way for them to start moving towards being more innovative. Of course, they need to do better due diligence that we've seen in the market recently, and understand what it is that they're acquiring, and making sure that they don't just take the employees and put them into the legacy IT department and say, okay, now we're more innovative, which I've also seen seems to happen sometimes. But yeah, there's a lot of opportunity for M&A, and I expect not just M&A within fintech, but also within the banking and insurance world in the US.
Yeah. So one thing I'd like to check in with you as well. I hear a lot of people that say, there can't be that many fintechs. There needs to be consolidation, right? So I think that especially if you talk to banks and insurance firms, they always say that. But when I then talk to them about and say, there's 6,000 banks in Europe, right? So I don't see them consolidating. So, I think we can deal with 10,000 fintech companies. That shouldn't be much of a problem. But it keeps on resonating. I hear people coming back to it time and time again. I'm just curious about your take on that as well. Do you see that a lot of parts in fintech are not just winner takes all, but actually are leave room for a very fragmented market as well, I believe.
Yeah, I agree that there's definitely a lot of areas that are not being addressed by the incumbents, and opportunities for fintechs to continue to innovate and expand. I mean, you see, SoFi, for example, in the US, has done a decent job of going from a monoline, if you will, to a full-fledged bank. I expect that will continue to happen with organizations moving into other capabilities and building different models. But it's going to go all ways, right? Some organizations are not going to be able to grow beyond, their buy now, pay later product, for example, into deposits or into something else, and they'll have to be acquired. It will continue to be just this big development of the market and change. But I do wanted to just mention, based on what Florian said earlier, there are some markets that are very hot. Latin America, Africa, you see lots of activity there. Nubank has been able to grow in the market because the incumbents in Latin America are, if we think that the incumbent banks in the US and Europe are slow, you haven't seen anything until you look at the big banks in Latin America and in Africa and what they're not doing. And many of them struggle with just a basic mobile app. So a new bank comes in, looking like a neobank, and of course they're going to get a lot of the market.
Yeah. Yeah, definitely. Really nice example, I think, indeed, of how you can get traction and make a really big leap forward. Yeah. So how do you see that in InsurTech, Florian? Is it also consolidation time already? And do you see the InsurTechs already being picked up by insurance firms?
Yeah, that's a good question. So first, we saw such an example last year with Allianz X that acquired Simple Insurance, which was a kind of historical embedded InsurTech company in Europe. So that's the first move. Obviously, unlike in fintech with valuation done and/or a huge need for capital raised from a few startups, there will be opportunity to acquire startup. I'm still wondering whether corporates, incumbents, meaning insurance or reinsurance player, will move fast enough to close these deals. And I'm wondering whether we will rather see M&A between startups themselves, again, to grow significantly, maybe a few M&A cross-border, because when you manage to have a significant size, then you manage to have more profitability in the insurance space, because you manage to get a bit more, especially when you are a broker, you manage to get more fees on the premium that you are selling. Okay. So there is an incentive to become a bit bigger. And if you cannot acquire customer in the old-fashioned way, spending money on advertisement, maybe you can merge with a similar company again to reach a significant milestone. So that's one thing. The other opportunity is a pure tech play, for instance, because tech players, tech vendors, software provider might be interested in leveraging such technologies or such, let's say, customer portfolio as well. That's a good way to enter a new market. And on the other hand, I believe that, and that's interesting what you mentioned before, referring to incumbents to justify that actually there might be not dozens of thousands of players in each section, but there might be several players. That's exactly what we see among incumbents, though the M&A wave is already happening as well among corporates. And the truth is that startups probably have a break-even which is way lower than incumbents due to their state-of-the-art IT system, the technology that they are leveraging at the core of their business. So it highly depends on your ambition as a founder, because you can be profitable with 10 employees. But it's not the same as being a global player or even a national player. So it's also related to where you want to land. And again, profitability is one thing, but I believe that for most of the startups, especially at early stage, it's rather profitable growth. So keep growing. If you are a startup, if you're a tech player, your valuation is high because you are growing. So as soon as you stop growing, that's a challenge. But again, there might be a size where it's more relevant to be profitable. And again, you cannot be unprofitable for ages. So at one point, you need
not anymore.
That.
No.
We're already seeing some activity in M&A and InsurTech, right? We just saw Vouch acquired Level. So that's an example, and that's for the first week of the year, and that's already happening. So more and more of that will be coming.
Yeah, I think that's it's really interesting to see that happening, and I think there as well. I mean, if you for example are in B2B fintech, you still see that actually your skill matters a lot in how easy it is to land deals, right? So I think that's also forcing companies actually to collaborate much stronger, or to actually work together or do an acquisition. And of course, potentially now with the interest rate rising, we less availability in venture funding might actually force companies to collaborate much stronger to together have the capital and the resource to actually scale further. All right, really interesting. Let's take this on the next conversation. Everyone listening in will hear you and see you again after the break.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
And we're back again. Thank you still for listening in to the Breaking Banks Europe podcast. And we're continuing here with Florian Graillot and Alex Jimenez, discovering what's going on at the fintech front. We've been talking about neobank, the funding landscape, M&A. One of the things we didn't touch upon just yet is what's happening in crypto. I mean, we've seen a pretty bad year for crypto, where it's been pretty hard to identify whether the party you're dealing with is actually trustworthy, and whether the numbers actually make sense that they report. I think it makes a pretty harsh environment at the moment. I'm curious about your take on that, just to understand a little bit what you think. Does this mean not just for crypto, but actually for fintech? Alex, what are your thoughts? Do you think that people sort of resonate what's happening in crypto and also look at fintech then with a different angle, or do you think that's completely separate?
Well, in some ways, the more you look like a legacy product, the less you're going to be tainted by what's going on in crypto, for sure. So there's that. If you're a neobank and you're not dealing with crypto, you probably are okay from a PR standpoint. But certainly organizations that were doing DeFi are now being colored by, okay, what are you the next FTX and so on. Just recently, I talked to a company that is in digital assets that is as far away as you can be from FTX, and they are extremely unhappy with how their clients and their vendors, everyone is dealing with them, because now they're being treated as, well, maybe you are not, you're not an upstanding person because you're in this space. And so it's a difficult place to be. But, one of the things that many of us have been saying all along is that there's a lot of money that was being thrown to crypto and a lot of people jumping into crypto when they had no business being in crypto, not understanding what they were putting their money into, getting opinions from their Uber driver and where they should be buying or where they should be investing their money and, buying all kinds of meme tokens, etc. So some of that was going to happen at some point. Certainly, I don't think we were expecting something like what has happened with FTX, but it really calls for a lot of rethinking of how we approach crypto, and the fact that regulators throughout many different areas have just dropped the ball. They really haven't focused on how to protect consumers against the likes of what we've seen. And, one of the things that if you talk to crypto faithful, they'll say, well, you don't need regulation. You don't need regulation because everything is public, because this is decentralized. There's not a central group that's driving this. But guess what? There are central groups, right? They're the wallets and the trading companies. Those are the ones that need some regulation. So maybe you don't regulate Bitcoin or another token, but what you regulate are these organizations that are centralizing some of the functionality, and make sure that they're not out there, stealing people's money, which is in essence what FTX did. It is time for regulators to actually step up and do something about it. And here in the US, it's a hot potato, right? Is crypto security? Yes, no, yes, no, no, yes, no, no, and no, it's a payment vehicle. Therefore, we're not going to do anything about it. It's been quite a mess in how we approach it from a regulatory standpoint. So we need to lay down the law and really start looking at it. Certainly, the EU is doing some things that are better than what we're doing in the US, and the US needs to start looking over to the EU and learn from what is happening there. But if you look at APAC, Singapore, some other countries that are taking a different stance, that there are some learnings from that as well.
Yep, no, I think so too. And the MiCA regulation in Europe is definitely an interesting approach to it, and not perfect, but definitely a good step towards trying to regulate it. Absolutely. And it's been, of course, a very difficult field for regulators, as they always didn't want to endorse crypto in any way, which would come also with regulating it potentially. Right. And I think that's one of the challenging, sort of a schizophrenic approach that they had to take there.
There's the skill set, right? Most regulators are attorneys. They're not technologists, and just understanding what's a smart contract, what's the difference between Ethereum and Bitcoin, for example, is not an easy thing to understand. And if you're not tech savvy or tech leaning, that some of that is going to go right over the head.
Yeah, no, I fully agree. And then again, as well, with the fact that a lot of crypto is set up to be anarchistic by default, right? Exactly. That also makes it kind of hard to fold it into the regulated system. Yeah. So how do you see the link there, Florian? I think the link with InsurTech is not that great, right? So I think it's fairly different worlds. But do you also see that there's a similar stance towards it in the market?
Yeah, that's an interesting moment, I think, because if you have a look at the last years, there were a lot of use case. You mentioned DeFi, for instance, or the blockchain technology itself, a lot of use case around banking, financial services more generally, and actually a few of them only were around insurance. So we were kind of still looking for real use cases or real startup leveraging this kind of opportunity, technology, new way of managing value online with application in insurance. There was an initiative, actually, B3I, which closed / goes bankrupt or went bankrupt last year. But the truth is, it was a kind of group of incumbents working together around the blockchain technology. So I'm still unclear whether it was a proof that the technology could not apply to the industry, which I highly doubt, or if it was the setup that didn't really make sense. Again, having only incumbents around a new technology seems to be surprising, at least. So let's see if there are other opportunities. And on the other hand, I think that the drop on the market is also related to how much was invested in that space, because what we mentioned in section 1 around investment in fintech were even more crazy around crypto. There was so much money invested there that by design there were, let's say, weaker projects that get access to financial anyway. And I think that the huge opportunity that is still ahead for insurtech startups is how you manage to insure digital risks. Because that's money. And again, it's not only insuring them from theft; it's also how you manage to ensure that digital value. And I think that in that topic and in that regard, there might be a lot of opportunities in the future. Same with technology, because I think that there are again two parts in the crypto market. You have the B2C plays with the wallets that we mentioned. There are initiatives to try to have cold wallets like Ledger, the global players based in France. But you have plenty of other opportunities, and then you have a lot of B2B or pure technologies that are trying to make it happen. So I think that there is still a lot to do, and for sure there is an insurance opportunity, because that's a new risk where we lack data, we lack understanding, hence we lack how to price this risk.
Yeah. Isn't it also a challenge at the moment? Because I think I also read somewhere that cybersecurity risks are becoming harder and harder to insure, right? So I think on one hand, there is indeed an opportunity coming, and at the same time, are we good enough at assessing digital risks at the moment?
Yeah, definitely. And actually, we put them in the same basket, which is new risks, where basically the risk is not covered by every player on the market. It's surging, and cybersecurity even more than digital assets so far. And the third point, we lack data, because there is no historical data, and that's the challenge. And back to cyber insurance, for instance, there was a big reinsurance company that highlighted that potentially in the near future, this will become the major business line for them. But so far, they remain very cautious until they have enough data, because the truth is that you can cover whatever you want, but if you don't know when things will happen, and most of all in cyber, how much it will damage your team, your organization, your data, your assets, that's almost impossible to insure. So I think that the challenge in cyber, in digital asset, and in many other areas is indeed getting data to understand and assess the risk.
They can imagine someone shopping for insurance for their NFTs, right?
Yeah, it's quite interesting. And I think what I'm also maybe a bit on an extension of that, Florian, to you as well, is like, do you see democratization of assuming insured risk coming up as well, right? So I think you see that as well as in a sort of risk sharing pools, which is a lot in a confined environment. But for the rest, the risk acceptance market is not a public market, right? That's a closed market where not everyone has access to, which actually might limit innovation across the board, because it's not that I can say, I think I can understand, this cyber risk, so let me take a chunk of the risk as investment.
Yeah, or another, let's say, way to address it is that we start seeing a pool of corporates that are teaming up together, putting money in the same basket, and then considering that they might insure, but by design it's very small basket, so it covers only a very tiny part. But that's initiative, and I think that what is exciting here is that maybe we need to rethink the way to insure things, beyond assessing the risk, pricing the risk, maybe there is another way to address this kind of risk, because they might be systematic, they might be huge, and they might be unknown. So that's a real challenge for the industry, and that's where technology should help.
Yeah, and I think that's also one of the interesting topics I think we could also touch upon is where you get actually to need technology to be able to work with technology, right? I think, the most clear example there, I think, is, for example, how we work with virus scanners and spam protection in your email, and you actually get AI to fight AI, right? Potentially. You also see that in capital markets, for example, right, where most of the volatility is created from computer to computer, not human to computer or human to human. Which I think is a really interesting phase as well that we're going into, which I think is very scary for a lot of people. So I see that when this discussion pops up about the use of data, algorithms becoming more and more sophisticated and potentially more independent in decision making, you also see the fear on the rise. And I think especially in Europe, I know about that. I'm not sure about how the US is looking at that, as they have a bit more open stance towards the use of personal data generally than the Europeans do. But I know that there's a lot of worry about the use of AI, and I'm just curious what you're feeling about that, Alex. Are US citizens open to actually use artificial intelligence in their financial products or around their services?
I think certainly more so than Europeans. Obviously we have different regions, and you see California, for example, trying to follow the lead of the EU on privacy, and other states going down that path. But I think in general, Americans are less fearful of giving data in return for convenience. So that helps the story of AI. But some of the things that we're seeing today with ChatGPT and other solutions that are being presented, there's a lot of excitement around AI, but there's a lot of issues as well that we got to be thinking of. Otherwise, 5 years from now, we're going to be thinking of how we claw back some of the issues that have come back. We're already seeing bias in algorithms for underwriting of insurance and for underwriting of loans, based on people's name, religion, color, etc. And if we go down this path without looking at what's in the black box, then we're going to continue to have societal issues. So there's lots of ways we can go about talking about AI, but it's exciting, but at the same time, we got to be careful.
Yeah, I totally agree. I think it is very exciting what you can do with it, but it needs to be regulated as well, and we need to identify that it can be very powerful in both the good and the wrong way. Yeah. How do you see that, Florian? What's your take on this? I think AI for also in insurance is actually very highly appreciated.
Yeah, we see more and more corporates embracing AI projects or technologies. The truth is that I think that there are two parts on the market. On the customer side, as Alex mentioned, I think it's all about value proposition. We have obviously the GDPR here, but if you believe that sharing your data will benefit your service, then it's fine. And by the way, we are all doing that every day using Gmail, for instance. So that's what we are doing, and that's the famous if it's free, you are the product, but it's also around the data. But again, you are fine sharing a few data with tech giants because they are delivering value to you, and I believe this is a challenge for financial services, including insurance companies, because if an insurance company tomorrow morning asks you to share your health data, probably your first question will be what for? And probably you have a Fitbit or an Apple Watch, or you wear an Apple Watch or a Fitbit, which is my case, for instance, and I'm already sharing all my health data with them. So because it benefits me, because I can track, my sleep, when I'm running, if I'm in good shape or not. So again, the feedback and the value perceived by myself is big enough to be comfortable sharing this data with these tech giants. So I think it's quite interesting. And on the other hand, around AI, I really believe it's around explainable AI. If you can explain how things are working, on how the decision was taken, it's very powerful. But I have a very clear example because we have invested in that startup Zalros doing AI for insurance distribution. But they are not replacing the agents and the broker. They are kind of supercharging these guys and girls, offering them prediction on which product they should push in front of X or Y customer, arguments to support these sales. And again, it's very powerful, and that the results are quite impressive because it obviously increases the conversion rate because the argument and the product are more relevant because the algorithm is able to spot the real needs based on who they have in front of them. So again, and that's true for InsurTech and probably for FinTech as well. It's not InsurTech against insurance. It's rather the two together that will be more powerful and that will open a new generation, I believe, in insurance. Or at least that's our investment thesis at astoryaVC. But so far, it seems that more and more technology is supercharging existing players. That's what is exciting. And AI is one clear benefit for the industry.
Yep, and I totally agree on that. It's actually about XAI or explainable AI to a large extent. And I think now we see some very interesting projects of communities or institutions actually opening up their ledgers of algorithms to actually show exactly what they use, how they use it, what the boundary conditions are. I think really interesting to see that development. Because very often, and I'd like to touch upon what you mentioned with, for example, your Apple Watch or other things. And I think the relationship with big tech in particular is actually we don't always have a choice when we say yes to share our data, right? We're at least socially and potentially more being held hostage in a situation where there's only one way out, and that's press the OK button to move forward, right? How do you see that? Do you feel the same there, Alex? Does it also feel like that in the US, or is it less of an issue, perhaps?
No, I think it's the same, and it certainly all depends on who you are and what you're trying to do, and we are held hostage by the big tech companies. I long ago when I worked at a bank and we were looking to offer Apple Pay, Apple sent their contract over. And I had to have our legal department review it. And they said, we need to make changes, which, of course, made me laugh. And I laughed for maybe about 2 minutes. And they said, well, I don't understand why you're laughing. And I said, good luck trying to get Apple to change their contract. It's take it or leave it. And that's, that is what we have, or for things like Apple Pay, for things like Gmail, right? If you want it, you take it. Otherwise, you can walk away from it. And in some cases, it may not be something that you want to do from a business decision, right?
Exactly. No, that makes it really hard, right? So they've become really dominant players. It's interesting, by the way, as well, to see what that will bring in the new year. As also, for example, the European Committee is shaping up to actually push back on these market powers.
Yeah, we'll see.
Yeah, no, it's another run race for sure. Yeah. An interesting year ahead. I mean, we've got a lot of things to look out for, right? I mean, we can hopefully vouch for a war ending in Ukraine, interest rates stabilizing, venture funding climbing up again, and new startups coming up from all the layoffs that we've seen over the past year, with talent being available in the market with sufficient problems to solve. A potential next Cambrian boom of FinTech and InsurTech companies. I'm up for it. How about you?
Sounds perfect.
Yeah, there is a lot, and I think that's what you mentioned. There are enough, let's say, pain points or problems on the market to be solved. So I think, once again, there is still a lot to innovate in financial services and especially in InsurTech, but I think it's also the case in banking, in wealth management, in crypto that we mentioned before. So that's quite exciting. Though 2023 will be, I believe, very insightful depending on how the market comes back again or not, if there is indeed a wave of M&A, if VC money is pouring against startup, but for sure, there are a lot still to address.
Yeah, indeed. I think it's a good way to actually wrap it up as we look ahead to a successful 2023. I want to wish all our listeners, of course, the very best for that. And please stay tuned to Breaking Banks Europe to listen in on all the latest news, analysis, and the foresights of what might be coming. And for now, of course, I'd really like to thank Alex Jimenez in the US. Thank you for joining and sharing your insights. Great to have you on the show. And also Florian Florian Graillot from Europe. Thank you for sharing your insights, especially from the InsurTech field. We're very much looking forward to have you on the show soon again. My name is Don Ginsel, and I was thankfully your host for today. Looking forward to listen to you again or speak to you again next time. See you soon.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.